Hi, Jonathan York, my financial partners, looking at the investment markets. US stock indices setting record highs still, really buoyed on the fact that they're looking at getting this trade deal between China and the US done. Now, at present, that seems to be a little bit on sort of thin ice in terms of comments coming out of the White House that first talks are going very well, deals expected to be signed, could be signed before Christmas, etc., etc. And then sort of the next day or a couple of days later, oh, we're looking at increasing the tariffs if China doesn't do the deal. Certainly a little bit of ambiguity there. It looks like a deal has been agreed, sort of phase one anyway. But now, supposedly China's maybe pushing back a little bit in terms of the sort of dollar value on agricultural products they're supposed to be buying, and maybe a couple of other little issues as well. I think one thing is for sure, though, certainly both sides need the deal. Certainly the US need it probably as much as China, especially heading into the election year of 2020. So now just waiting to see whether the tariffs that were sort of announced, potentially kicking in December the 15th, whether they actually take place or not. Also, as well, quite interesting this week, there was sort of an unscheduled meeting between President Trump and Fed Chairman Powell. That was sort of quite interesting because Powell certainly towing the sort of Fed line that, interest rates are sort of where they need to be at present. We don't need to see any further cuts. It's data dependent. The US economy is growing at a pretty good rate. You've got, reasonable growth. You've got record low unemployment. And, Fed policy at present is stimulatory enough for the economy. Perhaps more interesting, though, coming out of it, there was no comments from the president in terms of his recent criticism of the Fed and Fed Chairman Powell. There was no comment on that at all. But against that backdrop, President Trump is still fighting a few fires on the impeachment side. Still claiming that it's a witch hunt, sort of trying to really pour mockery on it. Also, potentially as well, sort of the tweets that are taking place in regard to some of the witnesses, have been sort of compared to sort of witness tampering. In the UK, the election's on a full swing now. Again, the sort of UK economy is sort of okay-ish. Currency has certainly strengthened as it looks like Boris Johnson and the Conservatives will get back into power. It's just a question of what sort of majority they get and whether it's enough to be able to govern or whether they have to have some sort of coalition. Because certainly if it's some sort of coalition, then obviously Brexit potentially is sort of back on hold and sort of into the melting pot again. A little bit closer to home, on the Australian central bank minutes were still, pretty sort of sluggish out there, still reasonably dovish. With interest rates, official interest rates there at 0.75. Potentially they might be heading still a little bit lower. But at the moment, you've seen that cut in interest rates certainly buoying the housing market, and certainly the clearance rate, certainly in Sydney and Melbourne, is picking up quite considerably. And as a result, we're starting to see house prices creep up a little bit as well. Here in New Zealand, the Reserve Bank surprised many by leaving interest rates unchanged last week. Most analysts and economists were expecting a cut after the sort of weaker than expected inflation data a couple of days previously. Now, obviously, there's still less of the door open for potentially lower rates, but it's also, again, sort of data dependent, but also as well, really waiting to see the full impact of the half-point cut that was back in August and seeing how that's going to filter through the economy. But again, here in New Zealand, house prices and the housing market is picking up a little bit. You normally expect that coming into spring, but with record low interest rates and mortgage rates, certainly the housing market is picking up a little bit, and that's sort of spreading through and giving a little bit of sort of consumer confidence out there. Business confidence still pretty weak though, and that's really sort of a byproduct of a business perception of sort of government policy at present that appears to be a little bit sort of wishy-washy and not really having much sort of go forward. Now, obviously, 2020 is an election year, and there's a pretty large surplus there, $7.5 billion. So it's just going to be interesting to see what potentially sort of bribes come through. Bribes in the form of sort of government spending and so potential tax cuts, etc. Now, obviously, in this low interest rate environment, certainly savers are suffering a little bit. That's really the flip side to the low sort of mortgage rates. And say if you are looking for income, there's plenty of alternatives available out there. And call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.